All right. Thank you, everyone, for tuning in here. So we are going to do our spy review slash preview. I don't know. You can call it whatever you want. I guess it's. I think preview is probably more, marketable because it's like what's going to happen in the future, as opposed to review, as opposed to like what happened yesterday. But anyway, I just want to, talk about the S&P 500 is 11 sectors. Different sectors are in the driver's seat at different times. For a while, tech wasn't really doing much over the last week or two. It was really more about healthcare and financials. But now I think it's back to tech. So if we go to the S&P, the SPY ETF fact sheet, it's SSGA, which is State Street Global Advisors. We can get this information, right? We can see what are the biggest sectors. We can see what are the names in the biggest sectors. So without much ado, if that's even a term. All right, so look at this. The S&P, continues to move ahead. And this is good positive action. I mean, look at this, right? I mean, if you're a long-term investor, you probably don't really care, but if you're a shorter term trader, which most of my students are, there's some good examples here, right? What goes up fast comes down fast. What goes up fast comes down fast. The reason why this action is healthy is because it's just nice and slow. And this is what you want. I mean, I know it's boring, but this is healthy action. Now we're going to go look at our sectors, right? The biggest sector is tech. Financials is the second. Well, look at that. Consumer discretionary has actually overcome healthcare. For a long time, healthcare was the second biggest sector. But anyway, different sectors are in the driver's seat at different times. And you can even drill down a little bit lower to see which industries are influenced in that sector. So we're going to just look at the ETFs. When I first started doing this a long time ago, it was really hard to get charts of these sectors because the companies that do them sell them, right? All right, now here is our technology sector. Now this action looks pretty good to me, right? I mean, it didn't do much today, but we just got above a resistance level. You could say that this is a potential breakout. When traders say breakout, it's not just a symbolic thing, right? Resistance is a large group of people that want to sell, traders, investors, whatever, at the same price level. If the shares get above that, well, guess what? That could tell us something. It tells us that the people who created the resistance with their sell orders are out of the way. Maybe they finish their orders, maybe they cancel their orders. Regardless, when buyers come into the market after that and they want to buy, they're going to have a hard time finding sellers. So they're going to have to be willing to pay premiums. They're going to have to be aggressive and bid higher prices than the prior trade. Now, we didn't really see much here today, but this is kind of healthy action. I mean, it's going to take a couple more days to figure out what's going to happen here, but the market is an ongoing narrative, and this is what we do. Different things are important at different times. All right, so that's the tech sector. And wow, so financials are the second biggest. So we're going to look at financials. Now, the financials were leading the rally after the Trump election, but you can see here they're really not doing much. So we're not going to get much insight from there. Consumer discretionary, believe it or not, is mostly Amazon. Wow, look at that, right? There you go. There's some strength there. Just like we can look at the S&P 500 and get insight from the sectors, we can look at the sector and get insight from the stocks that are in it. Same way, we're going to go to the S&P or the State Street Global Advisors site, and we're going to look at the sector. All right, now look at that. Amazon and Tesla together are 30% of this sector. The next biggest guy is Home Depot, which is 7% or almost 8%. So let's take a look at Amazon. I mean, I know these guys are in my freaking yard or driveway every day delivering stuff that my wife orders, but that's a different discussion. I do marriage counseling. I do advice for younger people. All kidding aside, Amazon's looking good. Could be a breakout there. Tesla. Let's take a look at Tesla. Kind of the same thing with Tesla. Like, check that out. It's breaking above resistance. So consumer discretionary is this is kind of interesting for at least for a market guy like me. Oh, and then if you look down, you can see the hotels, restaurants, broadline retail, whatever the hell that is, specialty retail, whatever the hell that is. But anyway, this is a sector where you have two stocks that pretty much dominate it. Okay, what's up next? Healthcare. Man, pretty amazing story with that dude who got assassinated. And man, I hope something good comes of this. I mean, our healthcare system is so messed up. I mean, we could send a freaking probe to Pluto, right? And it's like, no, you could be working in your backyard. You got laid off because your idiot that runs your company is an idiot, which, I speak with firsthand knowledge about that. Um, but yeah, like you shouldn't have to go bankrupt because you lose your health care. Yeah, I work for this great company. You could find that on LinkedIn. I'm not going to use any names like Chris and Chad, but it was a great company. These guys thought that they were all that, and they were idiots, and they destroyed the place. And they still think that they're really smart. It's really amazing. Money management is quantifiable. You either beat your benchmark or you don't. If you beat your benchmark, you're doing a good job. If you don't beat your benchmark, you're doing a bad job. So if you don't beat your benchmark and you're doing a bad job, why do you think that you're smart? Anyway, here's healthcare. I'll tell you what, if I was a CEO of one of these other companies, I would have some serious security around me. All right, let's go back to the S&P now. Communication services. Let's take a look at that. Yeah, these guys are powering ahead too. Now, this is another sector that is just dominated by a couple companies, and they are Facebook and Google. So Google, aka Alphabet, is about 20%. Facebook is about 20%. The next biggest is Netflix. So these two these two stocks dominate the sector. So if you're trading anything within the sector, let's just say you're trading Charter Communications, for example, you should pay attention to what's going on with these guys because they're going to influence what is happening within the entire sector. So let's take a look at them. Let's take a look at Google, the most evil company in the history of mankind. Interesting, right? So the strength is not coming from there. And Facebook, kind of a little bit of the strength is coming from there. Let's take a look at Netflix. Wow, look at that. Netflix is ripping higher. I mean, so far everything I've looked at looks, pretty bullish. I don't see really any negative stuff going on here. Disney kind of consolidating after a big move higher. All right, next sector, industrials. There's 11 sectors, and remember, different ones are in the driver's seat at different times. All right, big reversal here in industrials, but that's okay. What's probably happening is money is coming out of here. Managers are probably selling this to get into tech. But what's interesting here is finding resistance at a former resistance level. People bought here, and it gets, and then right when they're done buying, the price basically craters. And when it gets back up to their level, they're like, oh, I can get out of here at break even. So remorseful buyers from here placing sell orders here creates resistance at a level that was resistance before. Now, why do we sell off when we get to resistance? Well, sometimes the people that want to sell start to worry. They know the buyers are going to go to whoever's willing to sell at the lowest price. So they start to undercut each other and you get a snowball effect. So getting to resistance and then selling off is a very common thing. And this is a great way to have a trading idea. If something's overbought or it gets to resistance, and the mirror image is true, if something is oversold and gets to support, pay attention, right? Because there could be some trading ideas there. And that's why you should subscribe to my site because, this is what we do here. Now, the rest of these guys are pretty small: consumer staples, energy, real estate, utilities. They don't really affect the broader market, but we always like to look at them just to see if we can get some ideas here. Yeah. Now, like, I don't know. I mean, I don't see much here. Consumer staples. All right. Let's take a look at real estate. Yeah, see, here we have another example. We get to resistance and we solve. Remember, there's a large group of sellers. That's what resistance is. And some of them start to get worried. It's like, man, I got all this stock to sell. I'm talking about the institutional world here. I got 1 million shares to sell of this thing. And the stock's at 45 and a half. I can sense other sellers are coming into the market. I don't want to miss out. You know what? I'm willing to shave a little bit off of my price. I'm going to go to 45.20. Someone else is like, wow, that dude went to 45.20. I'm going to go to 45. You get a snowball effect, right? Which makes things go lower. Materials. All right, now we could look for some potential trading ideas in materials over the next couple of days. We talked about how things, when things get to support, they tend to find support again. This stock is, or I should say, sorry, this sector is oversold, getting close to a price level that was support. Things tend to rally off of support. Why? Well, it's like we just talked about. It's the mirror image of resistance. Some of the people that want to buy start to think, gee, the sellers are going to go to whoever is willing to pay the highest price. So I better increase the price I'm willing to pay. Others are like, wow, that dude's paying up. I better pay up too. And you get a snowball effect, right? Forget all this stuff about earnings and this and that and the other thing. If you want to be a short term trader, you got to know the levels, you got to know the trends, you got to not overthink it, you got to underthink it. Something gets to support, it tends to reverse and rally. It's not a guarantee. All right, utilities. XLU. This is the utility sector ETF. Once again, right? Get to resistance, sell off. There's some big selling here. Wow. All right, now we're going to look at energy. XLE. Wow, look at that. That's kind of interesting here. Big move lower today. Now this could be some ideas on the short side here. So, what we're going to do over the next couple of days, we're going to look for long ideas in materials, and we're going to look for short ideas in energy. I think that it's easier to make money on the short side. And I don't mean like actually shorting stuff, I mean buying puts, because markets go up because of hope. Markets go down because of fear. Fear is a more powerful emotion than hope. You can see this right here, going up, going up, going up, going up. And it's like, whoo, wham. I mean, you can see it, like a lot of places on this chart. You can see it on any chart. When we look at a chart, we're just looking at a graphical illustration of the people that are doing the trading. All right, so that's it for our sectors. But energy has my attention here. Oil is hanging out. This is our oil chart. Let's look at natural gas. Natural gas must be heading lower. That's probably where this is coming from. I don't know. Not really. But this is why we don't want to overthink it. I can sit here for 3 hours, be like, oh, why is this down? Why is this up? Who the hell cares? You come to a point in your trading career where you stop questioning stuff. You just accept it, right? And you accept the fact that, gee, I can't figure this out. And I think a big problem is that a lot of people, they just focus on the media, and 98% of the quasi experts, well, not even quasi, 98% of the, so-called experts in the media just have no idea what the hell they're talking about. They just regurgitate. One of the dumbest things I've ever heard was this one guy on Fox Business News where, it was like August and it was really quiet. And he's like, oh, well, the traders are all at the beach. It's the algos taking up. Well, what the hell is an algo? An algo is a computerized program that trade stocks for people. Someone has to hit the enter button. Okay. To say that it's the algos taking it up and the traders are at the beach, that's the equivalent of saying like, oh, I drove by a construction site and all the carpenters were gone, but the hammers were, hammering in the nails. It's just asinine. This person should not be on the news and they should not be considered an expert. Interesting here, right? Levels that were resistance can become support. And look at that. We're talking about within pennies of a market that's worth trillions and trillions and trillions of dollars. But humans trade this stuff, right? So people sell and then the price goes higher and they're like, oh, I made a mistake. If it gets back to my level, I'm going to buy my natural gas back. Look at that. Like, look at where yesterday's low trade was, 298. Look at where the high trades were over here, 298. How is it possible that within 2 months, natural gas lost 22% or 25% of its value and then gained 55% of value and then lost 12%? What has changed in the last 2 months that would make natural gas have such different valuations? And the answer is nothing other than investor perceptions, right? Trading and charting is about understanding that what we're doing here is we're looking at psychology. Patterns are not astrology, especially like the stupid ass Gann theory, Elliott wave, harmonic charts. No one who's legitimate in the institutional world listens to that. If someone starts talking Gann theory, Elliott wave, even Fibonacci, just shut them off. Come over here, check me out on FinPub because I will teach you how to trade. All right. Thank you for enjoying my rant, and I will see you soon, everybody.